Hey, what's up everyone? It's Linorth and you're watching my price action course on my YouTube channel Trading with Linorth. In this video, I'm going to talk about the last two basic subjects which I need to cover before moving on to the more advanced subjects. So in this video, I will be talking about my own setup for trading price action and personality traits of successful traders. Alright, so let's get into it. My setup for trading price action is pretty simple. I use a laptop for trading. I'm not like any of those trading gurus you might see online who have multiple screens in front of them. I only have one screen and one screen is enough for me. Having more screens is not going to make you a better trader, and in my opinion, most traders who need more than one screen usually don't have a strong trading discipline and their trading is more emotional than logical. So they need multiple screens to keep an eye on all of their open trades and their charts all at the same time. And to me, that just shows that they are not confident in the trades they have entered and are just watching their trades all the time to exit them manually or exit them if things went wrong. And hey, whatever floats your boat, I'm not trying to rain on your parade. All I'm saying is that after you get good at trading, you'll find that it more often than not it's a boring task and you don't need a lot of screens to follow each trade, and there is no rush of feelings when your trades go with you or against you. I even go as far as saying that if you have any type of feeling while you are trading, you are doing something wrong. You have to have a I don't care attitude towards your trading, like whatever happens is okay, it's not going to get you overwhelmed or emotional. If you are stressed while trading, it's because you are doing something wrong. It could be that you are trading bigger sizes than you can emotionally handle, or you are risking more than you should on each trade, or any other reason. Because if you have a proper trading discipline and method, you are never risking more than you should. You are never in a trade without knowing what you are doing and what you expect from the market. And you know that whatever happens, your trading strategy is solid enough that you will eventually come out of all of your trades with a profit over the long haul. So you don't get emotional when a trade goes against you or you go on a long losing streak. If you haven't even started trading with real money yet, my advice to you is to stay on a demo account and build up your confidence and improve your trading discipline. And once you felt the confidence that you need to not get emotional while trading, then you can move to a live account. And sure, there are still a few things that you will only learn on a live account, so you should give that a bit of a learning curve too. But at least by that time, you already have a good confidence to not get emotional and make mistakes while trading with real money. Alright, let's move on to my setup for trading price action. As I was saying, I use a laptop and I trade mostly 5-minute charts. I say mostly because I often run trades on 1-hour charts as well. And I also have a few long time trades on my portfolio, mostly to cover for possible losses on my scalping trades. But most of my trades are on a 5-minute chart. I have no indicators on my chart, and the reason for that is simple. I don't need them. What most indicators do is that they take the price and put it through a few mathematical equations, and they show the result of those equations on the chart in various forms. And most of them lag behind, so they are really useless for me when I trade a 5-minute chart. I rather go straight to the source, which is the price itself. The only indicator that I use sometimes is exponential moving average, or EMA. I use a 30 period and a 300 period EMA for my 5-minute and 1-hour chart trades. I only use these two EMAs to have a general idea about the possible support and resistance areas and the direction of the major trends. Okay, this is what a chart looks like on my monitor before I analyze it or trade it. You can see both EMAs on the chart, and these will come quite handy while I want to actually trade the chart. I'll explain it in depth in another video later, but for now I just wanted to show you that a clean chart is always better for short-time trades, and I try to keep my chart as clean as possible when I can. Also, if you plan on doing a lot of scalping trades, it's better if you change the settings of your chart and choose a good color scheme for it. I have found that a white or black background makes my eyes tired very fast, and therefore I feel tired sooner, and sometimes that tiredness can lead to making trading mistakes because you might lose your patience or focus due to the tiredness. Alright, now that I have covered that, it's time to move on to the more important subject of this video, which is the personality traits of a successful trader. There is a list of personality traits that successful traders have, and most of you might be familiar with them already. Some of them are quite obvious, like being disciplined, being objective, being patient, being decisive, and many more. But I think the two most important traits are having realistic expectations and being great trade managers. Okay, let's dissect these all one by one. Discipline. Having discipline is all about doing what is right even when you don't want to. You have to always fight your intuition and try to stay loyal to your plan. Disciplined traders never give in to that voice in their head that's saying, hey, this might be fun to try, or hey, maybe it works this time, or hey, I just lost 3 in a row, maybe this one is going to help me make up for it. They constantly fight that voice back, and if they see a setup that is not quite right, or if they see something that might be fun to try, they don't take that trade. They just stick to their plan and just let it go, and in doing so save themselves from unnecessary losses. Being objective is all about knowing what you are doing and not letting your emotions take control of your actions. We are all humans, and it's natural for us to get emotionally overwhelmed sometimes, but mixing emotions with your trading is a huge mistake. You should know who you are competing against in this market. As a retail trader trading in lower time frames, your biggest competitors are institutional bots, and they don't trade based on feelings, so why should you? Unless you want them to take your money, don't take a trade when you have any type of emotional feeling towards it. Traders in trouble is being impatient. That's why having patience is so important. A lot of times a trader might go a few hours without finding a good trading opportunity. And what happens is that when some traders don't see a good setup for a while, they get impatient, thinking it's better for them to be trading rather than just stay around waiting for a good trading opportunity. So they say, hey, this one looks good enough, maybe I should take this one. And they end up losing money even though they knew the setup wasn't good enough or wasn't the one they were looking for. If you are a day trader, you should be willing to sit there sometimes without doing anything, just waiting for the right setup to enter a trade. Alright, realistic expectations. Successful traders have realistic expectations from the market. What I mean by that is they know that even the best setups have only a 60% chance of being successful at most. And 40% of the time, the market does the exact opposite of what you expect from it. And they know that there are no 100% successful setups in the market. In order for your trade to take place, an institution must take the other side of it, and if there was such a thing as a 100% winning setup, no institution would take the other side of that trade. No one wants to lose money, so why would they take a trade that they are 100% sure it's going to lose? So when someone offers you a strategy and they tell you it always wins or it has more than 60% chance of winning, and know that they are lying and they are trying to sell you something. As a trader, you are always facing uncertainty in the market. Whether it's uncertainty over whether or not you should take a trade, or where you should set your stop loss, or where you should set your profit target, there is never a clear answer to any of these problems. All you can do is to try to have the probability on your side. Also, you should never be afraid of losses. Successful traders know that it's impossible to never lose. Sure, sometimes I go a few days without a loss, but that doesn't mean that I don't lose at all. It just means that I got lucky for that period of time. And just like winning a streaks, losing a streaks can happen too. You shouldn't get emotional over the losses and get away from your strategy. And you shouldn't try to make up for losses by trading bigger sizes or even setups you wouldn't have traded if you had not experienced that loss. This is by far one of the biggest deadly loops a trader can get stuck in. What happens is that they experience a big loss or go through a losing streak, and then they try to make up for it by trading bigger sizes or trading bad setups, hoping for a win that covers their loss, and they end up losing more and therefore again trade larger to make up for a loss that has grown bigger now. And this cycle keeps repeating itself until the trader realizes that they have blown up their account and just gave up. You should know your own limits for losses. If you're one of those people who can't handle losing streaks or big losses, you should lower the size of your trades to a point where having your stops hit can't have any emotional effect on you, even if it happens 10 or 20 or 50 times in a row. You should enjoy trading. If your trading is stressful or makes you feel like shit at the end of the day, you're doing it wrong. If you are serious about trading, it's going to be your job for a long time, and you can't have a job that makes you feel miserable. If you are constantly worrying about losing money, thinking I just lost 4 in a row, I can't afford the fifth one, then your whole trading strategy is wrong and you need to change it completely. Managing trades properly. Managing trades probably is the most important part of trading. This is what sets normal traders and highly successful traders apart. The moves in the market are the same for all of us, but how you trade those moves is what sets you apart from other traders. You can do everything right and still lose money over time if you don't manage your trades properly. I actually need to save this one for another video because it includes everything from risk management and money management to stuff like scaling in and out of positions. So I will explain this in depth in another video. Alright guys, this is where I end this video. I hope you enjoyed watching it. If you like this video, please like it and give it a thumbs up. And don't forget to subscribe to my channel so you get notified when I upload a new video. And yeah, happy trading everyone!